Anthropic strikes 9.1B cloud deal with Bitcoin miner Riot Platforms. Anthropic has reportedly agreed to a $9.1 billion cloud computing deal with Riot Platforms, one of the largest listed Bitcoin miners in the United States, according to a Bloomberg report circulated by Cointelegraph on August 11, 2026. The agreement would give the AI company access to Riot's power capacity and data center footprint, and it marks another step in a shift that has quietly redrawn the economics of Bitcoin mining over the past year. The timing is notable for the market backdrop, not the price reaction. Bitcoin traded at $63,992 as of August 11, 2026, down 1.4% on the day, with the Fear and Greed Index sitting at 37, in fear territory. Mining margins have stayed thin through that stretch, which is precisely why deals like this keep landing. The math that pushed Riot toward AI Bitcoin miners own two things that artificial intelligence companies are short on: cheap contracted electricity and large buildings wired to handle it. After the April 2024 halving cut the block subsidy, the return on pointing that power at SHA 256 hashing fell for every operator that could not secure the lowest energy rates. Renting the same megawatts to a company training large models pays differently, and it pays in dollars rather than a volatile asset. Riot has been building toward this. The company has publicly discussed converting part of its Texas capacity to high-performance computing, and a contract of this reported size would anchor that plan with a single counterparty. For Anthropic, the appeal is speed. Power interconnection queues in the U.S. now stretch for years, and a miner with energized sites can deliver capacity far faster than a greenfield build. A sector re-rating in real-time. Riot is not the first miner to make this trade, and the repetition is the story. Core Scientific, TeraWulf, and others have signed multi-year compute agreements with AI and cloud tenants, and the market has rewarded the pivot with valuations that look less like a commodity miner and more like a data center landlord. A reported $9.1 billion commitment from a single AI lab pushes that narrative from experiment to structural change. There's a counterpoint worth stating plainly. Every megawatt Riot redirects to Anthropic is a megawatt not producing Bitcoin. That trims the network's hash rate contribution from listed transparent operators and shifts more of the honest accounting of mining economics toward private and offshore players. It also ties a Bitcoin company's revenue to AI demand, a market with its own boom and bust risk. Miners rejecting protocol changes like BIP 110 with near-zero signaling already showed how much the industry's attention has drifted from Bitcoin's roadmap toward its balance sheet. Signal for how mining companies now raise money. The deal fits a broader pattern of miners monetizing assets rather than selling coins. Some have borrowed against their treasuries, as Marathon did by pledging 18,750 BTC against a $600 million loan. Others have raised compute-backed debt, like Power Compute's $18 million Bitcoin loan, structured with no margin calls until September. An AI cloud contract is a fourth lever, recurring dollar-denominated revenue that lenders and equity investors value more highly than mining income tied to the BTC price. For anyone holding miner equities, the read is that the label Bitcoin miner is becoming a poor description of where these companies make money. Institutional confidence here is a bet on power and real estate, not on the next leg of the BTC price. Neither Anthropic nor Riot has published the full contract terms, so the exact structure, duration, and capacity remain unconfirmed beyond the reported headline figure. Treat the $9.1 billion number as a Bloomberg report until either company files or confirms it directly.